What's poppin', people? Getting back to basics for financial competency and ROK, today I want to talk about a very common question that doesn't have very much in the way of explanations for us here. You're watching Sekidur, and today we're talking about savings accounts with a focus on the difference between Yekum and Jokkum accounts. Now before we continue, we'd just like to remind you that this channel is meant for general education purposes only and isn't meant to replace the legal or financial advice from a paid professional. When it comes to investments, it's always healthy to take everything with a fair bit of skepticism regardless of the source, and that includes us. For that reason, nothing we say here should be taken as a basis for investment, and you'll have to do your own work and thinking before deciding whether or not anything we mention here is in your best interest. Want to know how? Well, if you just scroll down a tiny bit, hit the like and subscribe buttons, we'll do our best to help you figure out how to figure out this game for yourself. And that being said, let's get to it. Alright, so today we'll be talking about termed deposits, which are just deposits that'll sit in a bank for a set amount of time, accruing interest until a set maturity date, at which point the entire sum of the deposits are cashed out, interest is paid, and taxes are paid on that interest. It's just your standard savings account. When shopping around and signing up for a savings account here in Korea, you'll usually see two types of term deposits, either a Yekum or a Jokkum. Translated simply, Yekum accounts refer to fixed deposit accounts, while Jokkum accounts refer to recurring deposit accounts. Now, for some of you this may have spoiled the bit and told you everything you need to know about the difference between the two, but I know that a lot of people in my life don't actually know the difference between the two, which one is more optimal, or how they work, so today I'm gonna get into that. Starting with the most basic savings account, we have the Yekum or the fixed deposit account. This concept is pretty simple. You give the bank a set amount of money, you don't touch that money, and after the maturity date you get it back. During the time you've deposited the money, you can't add or subtract to the total amount of the account, and the money simply accrues interest over time. If you choose to cancel before the maturity date, then you receive less interest than you were initially guaranteed, but you do still get a return. Really, this is just a lock it in and stay locked in method. But for a quick aside, does this look familiar? Honestly, I think it should, and making note of the similarities will help consumers best understand how to manage their finances, because basically depositing money in the bank is like an act of providing the bank with a loan. Like all other loans, they pay you for doing so, and ultimately the key differences in savings accounts are basically just adjusting the terms of the loan that you're providing to your bank. Anyway, that's a bit of a meandering point, so let's get to the second type of savings accounts, the Jokkum. Now, the Jokkum is probably the most common one that we talk about because it's really the best version of an automated savings account whereby the customer or the saver deposits a set amount of money at an agreed upon regularity, be it once a month or like once a week, whatever, until the maturation date. Like the fixed deposit account, you can't withdraw any money in the middle of the term, so your deposits are effectively locked in unless you want to pay a penalty on the interest rate. So the question then becomes, which type of savings account makes the most sense for you? Well, let's consider the main differences using a thingy. Here's Ali. Ali has 12,000 bucks in hand and he's looking to deposit it over the course of a year, and he has either a Jokkum or a Yekum option. The Yekum returns 2.5% at maturity, and the Jokkum returns 4% at the end of the year. At first glance, the 4% interest rate obviously looks better, right? Well, let's do some math. No, I'm joking, I don't want to do math. That's what the internet's for. So let's swing over to NerdWallet's savings calculator and punch in some numbers, shall we? Oh, and I just want you to keep in mind that we're going to be using dollars because that's what the NerdWallet calculator uses, but it's really just a placeholder. It's not like our guy is depositing USD into his Korean bank account or anything. That would just be super complicated. Alright, so starting with the Jokkum, we have a starting balance of $1,000 with $1,000 contributions for 11 months, since that would give us our total of $12,000, right? The initial deposit is the first month, and then you have 11 months of $1,000 for a total of $12,000. As we said before, we have an interest rate of 4%, and bada bing bada boom, our total payout for the boy is $12,259.75 for a total of 259 3/4 fun tokens in interest. It's honestly not too shabby of a take home since all he did was nothing and just let the money feed itself. Now let's switch it up and punch in the numbers for the Yekum. For this one, we have a starting balance of 12k, there are no monthly contributions, and we also have the 11-month term. Now you're lowering the interest rate all the way down to 2.5 as well, and with a quick click on the thingamajigger, there you go. you have an end balance of $12,277.88. This gives the Yegum a nice $18.13 advantage over the Jokkum. But why? That's the big question, right? Well, to understand that, we have to look at how the loan was transacted in the first place. In the case of the Yegum, Ali gave the bank all of the money at the beginning, meaning that all of the money gained interest for the entirety of the 12-month term. In the case of the Jokkum, however, that 4% annualized interest rate applied only to the first 1,000, the first month. The rest of the deposits received progressively lower returns because each loan that he gave the bank was only good for a shorter amount of time. Thus, while the interest rate was 4% annually, the money that was in the account for less than a year didn't qualify for the full 4% because it wasn't there for a full year. Said another way, although Ali gave the bank $12,000 in both cases, the lower rate Yegum made more money than the Jokkum, specifically because the entirety of the deposit was all there for a longer time. Conversely, the Jokkum account was akin to opening 12 progressively smaller Yegums over the course of time. Thus, we can best consider Yegum savings accounts the superior savings vehicle, all things being equal. But of course, all things are not always equal, because there are many cases where the inferior returns are secondary to the benefits of a Jokkum account. For example, most people starting on their savings journey or who have little to no existing capital to commit to an account aren't likely to have the entire sum of their deposit up front. Most people, like myself, prefer to use monthly installment deposits because in the Republic of Korea, most people get paid monthly, and it's much easier to get the ball rolling every month by depositing small sums from your paycheck every single time you get one, as opposed to saving up a bunch in a liquidity account and then putting it all in at once. Now, it's not rare that you or I or we may want to throw in a few bones into the account whenever we have some spare money, which is not really an option for the Yegum because the fixed deposit is exactly that, it's fixed. The Jokkum, however, allows you to do so. So ultimately, what's right for you? That's the big question. Well, that entirely depends on two things. Do you have the set amount that you want to deposit already? Also, is this the best option that you have to reach your personal financial goals? Some may put them in funds, some may put them in stocks, some may prefer to put it into a liquidity account like the TOS account where they have it available. At the end of the day, what you do is up to you, and I'm not the guy who can answer these questions for you. But I really do hope that this has elucidated a few things about what your options are when you're saving money here. Finally, I know a lot of people are probably wondering what the best accounts for us are, and to be honest, I haven't really had the time. I haven't taken the time to see what the banks have done because the rates keep changing and bank rates keep changing, and what's available to the foreign population is also different from what's available generally. However, if you do have a Korean partner who's shopping around for a new savings account to open, or just like Korean friends or anybody that has citizenship that is looking for a good account, the Financial Supervisor Service, the FSS's Find portal, provides listings on accounts with the highest rates on their financial products at a glance page, which I'll link in the comment section below. With that, I'm goody. I hope this helped y'all understand what your savings options are here in the ROK, and I will be back soon, hopefully to finish that thing on population decline that I've been putting off for a few weeks. Hope you're happy. Stay scrappy. Peace.